Hi, we're back at the Singular 12th Annual Best of the Uncovered today with Evan Mazur, the CFO of Salem Media, a company that looks pretty opportunistic for long-term value investors at these levels, and a company that has the wind in its sails, so to speak, going into 2018. So, Evan, could you tell us just kind of an overview for the non, person familiar with the story? What is Salem?
Certainly. So Salem is a integrated multimedia company focusing really on two audiences, the Christian audience and the conservative audience. So pretty much all that we do goes after those two audiences. Now, when I say integrated multimedia, that includes radio, includes some network, we have syndicated talent, it includes digital, and it includes publishing. So we have 119 radio stations, focused really in the top 25 markets. 72 of our stations are in 23 of the top 25 markets, so we're not in Charlotte, we're not in St. Louis, or not in Baltimore, I should say. But really it's important to be in the top 25 because half of America lives in the top 25. And we're the third largest operator when you look at number of stations in the top 25 markets.
Quite a footprint there, quite a lot of reach. And your positioning, so to speak, is Christian alternative, or politically conservative as well. And so that, to many, is a underserved market, as most media kind of, shall we call it mainstream media, kind of tilts more to the other side of the town. Can you tell us the addressable market, the opportunities that Salem sees?
Yeah, I mean, first of all, if you just look at some stats by Gallup and by Pew Research, it's 71% of Americans identify in the Christian religion, and I think it's 42% are Republicans. So if you just think about, stations that go after the Christian audience, that's a large addressable part of the U.S. population. Same thing with the conservative side. I think America kind of woke up in this last election as well. I think most people didn't realize there were that many conservatives. It caught a lot of people by surprise. We were aware of it. We have not only radio stations, we have a lot of websites like townhall.com and Red State and Twitchy and Conservative Buzz. So a lot of conservative websites that we know are highly trafficked. So we know those people are out there.
They are in the market, too. Yeah, he would say neglected to a degree.
Correct.
So in terms of the operating environment, I know it's been not your favorite time, but you've had some headwinds. Can you talk about what you faced this year?
Yeah, so this year's been a challenge for a couple things. First of all, political. It's a non-election year.
Yeah.
You go to
it's a tweener.
Right. So you look at the last presidential election year was probably $5.25 million of political revenue. That's candidate money, that's issue money. Well, in 17, you're not going to have that. We did get some money for the 6th congressional district in Atlanta. They spent some money campaigning and spending money on radio stations in Georgia. But by and large, you go from $5.25 million down to a few $100,000. So that's a tough comp for all of 17. The other challenge is, we shut down, certainly from a top-line perspective, 4 loss-making magazines, which is great. It'll help us in 18. Some of those expenses kind of still carried on in 17, but in 18 we'll see an improvement to the bottom line there, and certainly hurt the revenue, and did hurt the bottom line a little bit as well. Going back to the political, the other issue is Regnery, which is our book publisher, does better historically in president or in election years in general, because there's just a renewed interest in politics and public policy. So we tend to have a larger slate of books that come out during election years. Our websites, our conservative websites, do better in election years as well. And then finally, the last piece that also had a drag was our largest station, KLTY, FM in Dallas. Routinely, women 25-54, it's been top 5 for years. We've owned the station for since 2000. It's probably in that format for a dozen years even before. It's fallen out of the top 5, and that means you lose a lot of agency business.
Right.
So advertising was dropping, ratings dropped. We've changed management. We've made a few changes to the radio station. The last book in October was number 3. We think we're back there. You really need a 3-book average to start seeing that revenue grow, but we think 18 will be another good year for the KLTY. Yeah.
And midterms.
And you've got another election year. So while 17 isn't ending really strong, I think 18 will be better, and I do think from an equity perspective that creates some opportunity. We have a dividend that's about probably with the current price 5.3, 5.4% dividend yield, and I think upside on the stock.
Yeah, you're trading about a slightly discount to your book value.
That's correct.
Hard to find that type of value,
Right.
in a market at all-time highs. In terms of the overall growth strategy, though, and you've got your internet, you've got your publishing, you've got your radio.
Right.
Where do you see the biggest growth opportunities?
I think the biggest growth opportunity is on digital, and in particular, if I were to focus, digital a little bit more in depth, I would say on mobile. If you think about people are using their phones more than they're using computers these days, and so it's about 41% of our traffic is from mobile, and that's continuing to grow. So we're investing in creating more mobile apps for some of our websites, and also acquiring mobile apps that have a lot of traffic and have some revenue. So that's really probably our biggest focus when it comes to growth in the future.
I see. Now, these particular headwinds that you've have experienced in terms of your aspirations of growth, and with the idea of growing into digital assets. So you see things that are acquisition targets, and how do you address that?
Yeah, we're always looking at acquisitions. We're looking at acquisitions on radio stations. We're looking at digital properties. We're looking at publishing. So there's always things that are kind of going through our system and getting reviewed by the various division presidents, by our CEO. And I'd say a lot. We look at everything and we buy very judiciously on only certain things that just make a lot of sense.
Yeah.
So there certainly are opportunities out there. One of the things that our focus is, in particular on outside of radio, is to really look for acquisitions that are leverage neutral or leverage enhancing. So like if we buy something that's at a 4 multiple, our leverage is right now at 5.3. Just buying it helps bring down our leverage. So
Creative, so to speak.
absolutely. So I'd say we have a bias towards that. We'll still buy radio stations.
But it also has to fit your niche. as well.
Correct. Yeah. So on the radio side, the challenge is we'll reformat a radio station. So the day we buy it, it might have been doing
Make it fit, right?
Right.
That's what you mean.
We changed the format, which means you lose money initially because you have no listeners, but you have the expenses, and it takes a year and a half, 2 years, 3 years to really get to a point where you feel good about the cash flow. So that clearly hurts leverage, and that's why you'll see more of a bias towards digital, because you can find leverage neutral deals on the digital side.
So we've got a question from our analyst, Lisa
Okay.
Springer, that I wanted to, she wants me to ask you actually, and bear with me here, and hopefully I can pull it right up. Yes, in fact, get better with this. Salem, she says, is a strong generator of cash flow, which is used to make acquisitions, pay down debt, and pay that 5% dividend. Very attractive.
Yep.
Could you walk us through the decision process for how that capital is allocated?
Right. So I think the way to look at it these days, we refinanced our debt on May 19th. So we now have a $255 million high yield at 6.75%. So if you were to take your free cash flow and then back out the dividend, because the dividend's not going anywhere. Okay. So if you look at your free cash flow after dividend, I'd say you're probably looking long term half towards repayment of debt and half towards acquisitions. That's kind of a ballpark on where you'll see the use of free cash flow after dividend.
In terms of the landscape and the expectations that are ahead, for the 2018 and the midterms, what could go wrong? What might be a risk that you would be concerned about?
Well, I'd say the only thing that worries me about the 2018 elections is, a lot of it depends on where the key races are. So if there's a key race where the Republican side is spending a lot of money in Montana, I don't have any stations there.
Oh.
That could be a challenge. But if you think about, again, where most of the population centers are, we're in those markets, we're in those states. That's, to me, the thing that would concern me is if there's a lot of tension in Montana, Nevada, Utah. Those are places we're not.
Alabama.
Right, exactly. So, we're not getting any money on the local side on the race in Alabama.
Yeah.
So, but every year we seem to get our fair share election dollars.
And you have in your publishing some so-called names, celebrities. How important is that to your brand and driving revenue?
It's good. I mean, key is have some bestsellers. And I think I've mentioned to you before, if we have a good book, we can make it a better seller because of just all the ways that we're able to cross promote. I'm able to
Lever on your platform.
I can take an author and interview him on the Hugh Hewitt Show, Larry Elder Show, Michael Medved, Dennis Prager, Mike Gallagher. So now they're on 300 plus radio stations across the country. They can be on all of our local talk shows as well. We can syndicate, or we can advertise it on our websites. So it's important to have some big name authors. Now, we're also pretty cautious. You'll see some big name authors sign for really large advances and guarantees that they don't earn out. We're pretty cautious. We're not going to go chase a celebrity conservative author just because we want them in our under contract where we're going to potentially lose money. So we're pretty judicious about how we're going to spend money on advances.
Sure, good. Well, Evan, thanks again for joining us today
Pleasure.
at our conference, and all the best to you in the future and the growth opportunities in Salem.
Great, thank you.
Thanks, Evan.